Hello, everyone. Welcome to Wall Street from Main Street podcast interview. My name is Mo Daoud, alongside John Manfreda, and today's special guest is well-known investor Jim Rogers, the author of Street Smart, Adventures on the Road and in the Market. Thank you for joining us once again. Appreciate it.
Well, I'm delighted to be here, Mo. John.
Thank you.
Go ahead.
Well, the first topic I wanted to start off with is the ongoing currency war that's been going on around the world. You know, with the U.S. dollar strengthening against the yen and the euro, do you think the Federal Reserve will start pushing the gas pedal a little bit more and try to outprint Japan and the euro countries? Because the dollar is up 15% against the yen since November, and up 3% against the euro since January.
Well, I don't know if they'll print even more. I know that if things get bad, they will print even more, but I don't think just the present state is going to make them take extra action. The yen has been strengthening here in the last week or so, so I think they'll probably sit and watch for a while. But in the end, everybody's going to continue to print money because that's all they know. It's the wrong thing to do, but they don't know any better. And if things don't do what they want, they'll print more money.
All right. Well, my question is I just wanted to switch topics. There is a big currency war, but the recent news has been in Cyprus. And a lot of Americans have just, from what I've seen, that aren't familiar with Austrian economics, have sort of brushed this aside. What I've seen is a lot of this has happened. Depositors are going to lose now 60%. One of the reasons they needed the bailout was their exposure to Greek debt. And I was wondering, could something like this happen to America? And do you think something like this will happen to the American banks, where they might just start taking depositors' money as a bailout? Or?
Well, eventually, yes, because most of the developed world is in a serious problem. They're going to figure out one way or another to save themselves. They're more interested in saving themselves than in saving us. So whether they take depositors' money or take our pension plans, it's more likely, in my view, in America, they will next take the pension plans, the 401k plans, etc., and they will say, oh, gosh, all of you have been having troubles in your IRAs and 401ks, so what we're going to do to save you is we're going to give you 30-year government bonds, which are guaranteed, and you give us your money. And that way, they will say they're helping us, but what they're really doing is taking our money again. But one way or the other, yes, you saw what happened in Cyprus. It was condoned by the IMF. It was condoned by the European community. So politicians, as always, are going to find more ways to protect themselves and not us. So be careful. Be worried.
Now, a lot of people are asked the question, why should we worry about what's going on in Cyprus? You know, it's a small country. It's about, only about 1 million people that are living there. Why should people on Main Street worry about what's going on in Cyprus when it's only the smallest piece of the pie in the Eurozone?
Well, because it's setting a precedent. The politicians did it in Cyprus first for the reasons you said. It's 1 million people, and most of the depositors who lost money were foreign, non-Europeans. I mean, it's mainly Russian money. So the Germans and the French, etc., didn't really care about offending German voters because they don't vote anyway. I mean, Russian voters because they don't vote in Europe. Now, they have set the precedent, though, and throughout the world, when people start looking at how to get more money, they're going to say, aha, the IMF and everybody else has said, let's loot the bank accounts, and they'll figure out a way to do it.
Yeah, and in the U.S. economy, one of the ways that the government is stealing money from people deposit in America is through higher taxes and inflation. Do you agree?
Yes, no, that's what's going on. They're debasing the value of the money, and their taxes are up. I mean, they're taking steps already, and they will take more. I assure you, we got such serious problems that whatever they're doing so far is only going to get worse, and then they will start looking for other ways to take our money.
Now, I want to go back and talk about Japan for a little bit. You may or may not know, hedge fund manager Kyle Bass is predicting that the yen will be the first currency to collapse in the currency war. Do you agree with him on that one?
Well, when he says the first, a lot have already collapsed. But the yen, yes, the government there is actively trying to, debase the currency. But the pound sterling has gone down a lot too. I don't know which is going to go first. It doesn't really matter to me. The only thing that matters to me is if I'm in the wrong one. Then it would matter a lot. Whether it's sterling or the dollar, well, I don't think it'll be the dollar next. It'll probably be sterling or the Japanese yen.
I was wondering something just about this currency war. It seems like right now, every time there's a currency crisis, the capital flight always goes to the dollar. Do you see this as just giving them more rope to hang ourselves with? When I mean ourselves, I mean the U.S. dollars.
Well, that's one reason I happen to own U.S. dollars at the moment, is because I do expect to see more currency turmoil, and rightly or wrongly, when there's a lot of currency turmoil, a lot of people flee to the U.S. dollar because they don't know what else to do. I mean, it's not a safe haven, but it is perceived that way at the moment, and so a lot of people will flee to the dollar. And since I expect more problems, then I own dollars.
So I want to shift gears here and talk about the commodities. And a lot of people follow the copper market because it's a good economic indicator. A lot of people, call copper Dr. Copper because when the price of copper is going up, I mean the economy is doing well. When the price of copper goes down, I mean the economy's not doing very well. Do you still believe copper is a good economic indicator?
Well, it always has been. It's not the only one. Yes, that's a traditional view of copper, but copper is really more independent. It depends on its own supply-demand characteristics. There have been many times when copper has done nothing, but the economy has grown nicely, and vice versa. There have been times when copper has done badly, well, and the economy hasn't. So it's like most of those other things that you run into in the investment world. They're correct sometimes. The rest of the time, they're not correct.
And my question about commodities is actually one, some view of currency and also a form of monetary value is gold. Right now, if you look at what currencies have been doing and the Federal Reserve is commitment to stimulus, gold and silver have taken quite a dip, and investors seem confused. What's your view on it? What's happened in the gold market?
To me, it's clear, but I don't know if it's right or not. But I own gold, I own silver, but gold has been up 12 years in a row without a down year, which is extremely unusual. I don't know of any asset in history that's done that. Now, there may be plenty, but I just don't know about them. And gold has only had one correction of over 35% in that period of time. So what's been happening in gold for years is extremely unusual. It would not surprise me if the correction didn't continue or even get worse. There are things going on. The Indians are talking about they already starting to blame their problems on gold, et cetera, et cetera. So I own gold. I'm not surprised at the correction. If it goes down, I'm not buying, I'm not selling. Although periodically when it goes under 1,600, I buy a little more. It would not surprise me if it goes down a lot. I hope I'm smart enough to buy.
So you've been through many bull markets in your lifetime, and for the gold bull market, it's been consolidating for over 2 years now. This is a period where many investors, especially on Main Street, get worn out and just sell out. So how do you handle it as an investor without getting rattled? And what advice do you have for investors on Main Street that's been in the market for the past 2 years and haven't gotten any return for investing in the gold market?
Well, if they've been in gold for the last 2 years, they're actually losing money, probably. I don't have, as I said, my main advice is don't invest in anything unless you know a lot about it. And secondly, you've got to understand markets. Markets do all sorts of strange things. for 18 years, back between 1964 and 1982, stocks did nothing in America. In fact, they were down if you adjust for inflation. That was 18 years. They had ups, they had downs, they had big fluctuations, but essentially they went nowhere for 18 years. Now, if you got frustrated and sold out, you missed one of the best bull markets of history between 1982 and the next 18 years. So, please, you got to understand markets. That's the way they work. A, and B, be sure you understand whatever it is you're investing in. I wish it were easy. Boy, if it were easy, we'd all be rich, wouldn't we?
Yes, we would.
Yes. All right. Well, one of the favorite investments that you talk about is agriculture, and I actually see this as a big bull market just for world population, food demand, and what advice would you have towards people that want to get into agriculture?
Well, first of all, if you can't spell agriculture, don't do anything until you do your homework. And world population is not a reason to buy agriculture. Population has been growing for 200 or 300 years, but we've had some huge bear markets in agriculture in that period of time. I own agriculture. I own it because I see the supply and demand getting terribly out of whack. The world has consumed more than is produced for 10 years in a row now, which means inventories are near historic lows. So if we have more problems, prices will go much higher. But, John and Mo, what worries me even more is since agriculture has been so terrible for 30 years, we're running out of farmers. The average age of farmers in America is 58. In Japan, it's 66. In Canada, it's the oldest in recorded history. In Australia, it's 58. More people in America study public relations than study agriculture. So the old ones are getting out, and no young ones are coming. So prices have to go much higher, or we're not going to have any food at any price down the road, because we're not going to have any farmers. So I'm very optimistic about the future of agriculture over the next 10, 20 years for major secular reasons. Now, population worldwide, at least the birth rate worldwide, is in tremendous decline. So I don't know that that's going to save agriculture. I'm more worried about the fact that we don't have supply coming on the way we should.
And I have one final question. I know you have to go pretty soon, but related to your investment philosophy, the past couple years, the market has gone through 0% interest rate environment, currency wars, a lot of stimulus, a lot of bailouts. And, compared to like 30 years ago, we don't have as much free market as we used to have compared to the 70s or the 60s. So have your investment philosophy changed in the past few years because of what's going on in the macroeconomic environment?
Well, I guess you're talking about the U.S., because some parts of the world are much more open and free. If you go to China 30 years ago was a very tight communist state. It couldn't get much more control than that. Now it's one of the freest economies in the world. You can look at many places in Asia, especially, that have opened up a lot. Africa, same way. So the former Soviet Union. So much of the world has opened up more and more. In the U.S. and Europe, of course, we've closed up more and more. So my investment approach is more or less the same. I try to find things that are cheap, where there are positive changes taking place, and then invest. I don't see positive changes taking place in the U.S., except every once in a while on a cyclical basis. So my investments are, at least in U.S. stocks, so my investments are elsewhere. But my basic philosophy hasn't changed at all. I try to avoid places that are in decline and buy places that are on the rise.
I think that's why you live in Singapore now and invest in China and in that area.
Well, yes, I do. I have moved to Asia, but that's mainly for my children's education. I want them to grow up knowing Asia and speaking Mandarin. Couldn't do that in New York. So, yes, the future is in Asia, in my view, and that's why we're here. I'm preparing them, I hope, for the 21st century. And I couldn't do that as well in New York.
Right. Yeah, you're right about that. Well, I appreciate your time for coming on the Wall Street for Main Street podcast. So if people want to buy a copy of your book, Street Smart, Your Venture on the Road and in the Market, could they buy it on Amazon or can they go to the
buy
website?
Anywhere. They can buy it on Amazon, bookstores, my website. My website just connects to Amazon. I mean, anywhere they want to do it.
Okay, that's great. Well, thank you for coming on, and hopefully you can come back on soon.
All right. Thank you, Mo. Thank you, John. See you guys again. Bye-bye.
Thank you.